Hello everyone, welcome in today's video. And Amazon released their Q2 2026 earnings. They released quite possibly the strongest earnings definitely of this earnings season, especially among the Mag 7. Their earnings were just amazing across the board. So starting off, they had net sale increase of 20% year over year. In the quarter, they did about $200 billion of revenue. And they're fastly approaching being the first company to hit $1 trillion in a fiscal year for their actual revenue, which is very exciting. Their operating cash flows is now running at a run rate, if I remember correctly, of about $160 billion on the trailing 12 months, which we'll get into that more in a sec. Main thing right here we want to highlight is that AWS continues to accelerate the revenue growth. So we are seeing that actual return on all the CapEx spend they have done continue to actually seem to be justified. And it looks like they are getting a return on this, which is great to see. In fact, with AWS, which I believe I've highlighted down here, we can actually see this is, I believe, the third consecutive quarter of it accelerating. So if we go ahead and check, let's see. Segment breakdown. Here we go. Okay, so for AWS, we can see from Q4 2025, it started ramping more. Really, it's been ramping since before that, but it really started picking up around Q4. As we can see, it went from 24% growth, 28 to now a crazy 37% growth, which is so high when you're already on a base as high of 42 billion. Now, with that being said, this is very important for the market as a whole, because this does justify a lot of the other chip maker stocks as well that they're buying a lot of their compute from, and it's gonna help let that trade continue to expand as well, because with these Mag 7 companies actually getting the return on investment from all this CapEx spend for the data infrastructure build out, they're likely going to continue raising their CapEx spend. And if they're able to generate something I don't think people are considering, if they are able to generate these higher returns, eventually that operating cash flow is going to exceed the amount of CapEx spend, and that will allow them to raise even more. Obviously, they can't do it to infinity, but I don't think it's at the ceiling yet. And there's still a lot more compute, obviously, that needs to go out there, as you can see with the AWS growth. Additionally, something that was spoken about on the call by Andy Jassy is that AWS, they see getting to a point where it's reaching a $1 trillion of revenue a year, just for the AWS section alone. That doesn't include the other international and the North American segment of the business. And if you just think of that already, say 20% of that makes it down to operating cash flows. You throw a 20 price operating cash flow multiple on that, that's already a 4 trillion valuation, which Amazon currently is trading at a, let's see, I believe last I checked it was like under 3 or maybe a little above 3. Just at about 3 billion. And that's just for the AWS segment. And then also you got to think, is 20 really fair for a company growing this fast? Ideally, it should actually be higher than that. And we'll get into that in the second part of this video. But as we can see, speaking on the operating cash flow, increased 33% to 161.4 billion in the trailing 12 months. So operating cash flow is accelerating. And if we go over here, I actually had it pulled up on one of these, which I can pull up right here real quick. If we actually look at the percent change of operating cash flow, we can clearly see it's starting to accelerate. So if we back out here so we can get rid of some of those estimates, if we start looking at the actual the cash from operating activities that Amazon is generating within the trailing 12 months, which, let me adjust that, which they just did this 161 billion. We can also see clearly it is starting to pick up. We can see right here, it went from 12% to 15, 20, 30, and now 33% growth in the latest quarter, which is really good to see. We want to see that operating cash flow continue to pick up. As I've always said, this is the metric I personally use when I'm valuing Amazon for my actual purposes of running my projections. Now, advertising was another strong point of the quarter. I just wanted to highlight this because I feel like not a lot of people are noticing this, but it's growing 26%, and this is quickly going to become a big base of revenue. It already is a pretty large base of revenue, but it's going to continue to grow larger and larger. And advertising tends to be very high margin, which is going to be great for the future. Another thing right here, we can see their Trainium chips are actually doing really well, and they got some multi-year, multi-gigawatt contracts with Anthropic and OpenAI. I just wanted to highlight that because I feel like this gets overlooked by a bit. I feel like the market isn't really valuing their chip plays, as they are a big chip manufacturer themselves. And I feel like the market doesn't really value that as much, or the market always focuses on AWS, which is very important, great high margin, but this business is growing at an exceptional rate. You can even see right here that the chip business currently just exceeded 25 billion in annual revenue, and it's growing triple-digit percent. So this is a real business. It's going to be very meaningful to the bottom line much sooner than later. And if we go down here just a bit, I have some other information highlighted we can go ahead and touch on. Okay. So main thing, again, we're talking about that operating cash flow, but just right here, 2030 going to 33%. Again, great right there. I did want to just highlight, so the actual sales are also increasing quarter over quarter, accelerating growth rates, which is just going to be great for obviously the company, but even the stock price going forward. As that growth rate accelerates, they're likely going to be able to command a higher and higher premium on their multiple, which is going to be great for the stock price. And then again over here, highlighting the advertising services I mentioned earlier. Still 21 billion in a quarter, around that, going 22, 26%. So this is starting to pick up in growth as the advertising service continues to be a much larger and larger generator of revenue. So this is going to be another very good tailwind for the business as this continues to pick up. Other thing I just wanted to mention is that the actual main North American segment of Amazon, consisting of like all the shipping and Amazon, like the actual store and everything that everyone uses it for, as the expansion of their actual infrastructure gets better and better and they start implementing more of the robotics in there, I just see the margins improving on that side as well, which is going to mean it's a much larger contributor to the bottom line than it is right now. Because right now, obviously, it's not as high margin as AWS, which means it doesn't contribute as much to the bottom line. But if you look at the actual segment's revenue, it is much higher, which we can see right here. So it's contributing about 17 billion or for the 6 months and for the 3 months ended, it's contributing about $9 billion of operating income with 116 billion in sales. Whereas if you look at AWS, much less in the sales department at the 42, but because they're more, the margins are higher on this segment, they're still able to produce 16.6 billion. So they're able to produce substantially more with AWS. But as this segment continues to expand, which it's still expanding, and I know this build out has been going on so long, but it's just continuing to build, and they're going to continue to drive more efficiencies. This is going to be more high margin revenue, which is going to be great for us in the future as Amazon shareholders. Now, other thing I wanted to touch on here, nothing much over here in the actual presentation, but I did just kind of want to look at some of the valuation metrics. I did want to point out this free cash flow reconciliation. Just as a shareholder, it's going to be negative free cash flow for quite a while. That's just something you need to have in mind. If you're owning the stock, you're not going to have positive free cash flow for quite a bit. Pretty much everything they have is going straight into CapEx. And with the amount of returns they're getting from all the products we saw from the Trainium chips, as well as the AWS business accelerating, they really should be spending this aggressive. I think it makes sense. When you think of free cash flow, there's a few things companies can do with that free cash flow. And most of the time, it's really just buybacks or dividends. You see a lot of companies spend their free cash flow, or they'll put it back in cash. And my thing with that is They could just take this and instead of doing the build out, they could like do a big dividend or big buybacks. But realistically, if I get paid out a dividend, am I going to be able to allocate that capital as well as Amazon could? I don't think so. They're in a very unique position with how large they are and the scale they have, that they can invest that money much better than I can internally. And I think that's what they should do. It's going to grow the business more, and it's just widening their moat. This company long term is going to be likely more the first $10 trillion company, if not more than that, with the rate they're going at. Now, if we hop back over here, so we talked a bit about the operating cash flow. We saw it grew by 33%, and we can also see, based on analyst estimates, they have analysts expected to grow, I believe it was at like 20 something percent going to 2027. 23, which there's a very good chance the analysts actually are underplaying this and actually undershooting how much it's actually going to grow. But regardless of that, if we go ahead and look over here, we can see over since 2021, the price to operating cash flow has been sitting out at an average of around 20 to 22. So 20 median, 22 average. So we'd say about 20. They're currently sitting at an 18, so they're sitting under their median. However, the actual operating cash flow, as we saw, is starting to grow faster than it has in the past. It's at 33%. So ideally, they should be commanding some sort of premium. So with that being said, just if we just do a quick little valuation on here, and we just go to the DCF, we can go ahead and punch in some numbers and get a rough estimate. So if we're saying cash flows, if analysts have it at around 23%, I honestly think they're undershooting a bit, but to be conservative, I'm going to say 25% over the next 5 years are able to grow their operating cash flow. Price to operating cash flow, they're able to grow 25%. Honestly, I can make an argument they should be in the 30s, but I think 25 to remain more conservative. The median's been at around 20, so I'd say a little higher given the acceleration in growth. I always like to do a 15% discount rate, and we'll leave that annual change to share count based on the 5-year average of 1.18%. With that has the stock price going to $1,000 5 years from now, fair value 528, a CAGR well into the 30s. And even if you're more conservative with this, like let's say they're on the lower end, not 100, that would be fun, but no. Okay, they're on the lower end and they get like a 20% CAGR, and this goes back down to the lower end of their average. That's still a 20% CAGR you'd be getting with even these lower numbers. So Amazon remains one of my strongest positions, and I am going to continue holding my shares. I am not picking up anymore currently. It is already my second. No, it's actually my third largest position. Zeta actually took the place of second, funny enough. But I'm going to continue holding it. I'm going to enjoy the ride up. We'll see if it goes to 300 by the end of the year. I believe there's a good shot of that, especially with how good those earnings were. Even on the day or the day and 2 days after for the earnings, the stock was up pretty considerably. You can see on Friday, up 15%. So obviously the market enjoyed that. CapEx spend, I know they mentioned they raised it up from 200 billion expected to, I believe they're now sitting more at 220. But again, like I said, I have no problem with the CapEx spend because they're proving they can actually get the return. So that's just my quick thoughts on Amazon as a shareholder. I'm going to go ahead and end it there. If you'd like to check out some of my other videos, I did a lot on Zeta Global, which is actually releasing their earnings, I think sometime next week. I got to double check, but I'm pretty sure next week the next earnings for Zeta Global is coming out, so I'm definitely going to be covering that. I'm highly anticipating that one. I can't wait to see what numbers they have, especially they recently had a deal that went through with Palantir where they started overlaying Foundry on top of Zeta's system. So I can't wait to see and hear what the CEO has to say about that one. I also still need to cover Meta. I have not had time to go through their earnings. I know the market, it got hit pretty hard by the market. And I've seen a few things, but I need to look into it myself and get my own thoughts formulated. And I'll go ahead and make a video after I get through all of that, as well as SoFi. I saw had some pretty good numbers. I just haven't had a chance to go through it, so I still need to go through the earnings call for that one and read through the press release and everything. But with that being said, if you enjoyed this little quick breakdown, please let me know. Let me know if there's anything else you'd like me to cover or go ahead and cover in the future. Thanks.